This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Well, here in Chapter 14, we now deal with the various reliefs that are available to individuals to reduce their CGT liability. Now, thankfully, the rules that we have as regards the vast majority of these reliefs have not changed over the last 2 years, which means that we are able, yet again, to borrow from old lectures from Finance Act 20 and also from Finance Act 2019. So what will happen, therefore, here I'll give you an introduction to the way in which you will use the lectures for what was principally Finance Act 2020 there. You'll be able to use them in conjunction with your current study notes for Finance Act 2021. The first relief that you'll get introduced to in Lecture 14.1, which will continue then into Lecture 14.2, is one that we have made reference to before. We know it by name, Business Asset Disposal Relief. We know that any gains that may be eligible for the Business Asset Disposal Relief will be chargeable at a lower tax rate, a 10% tax rate there. So that's the one that we'll be looking at throughout this first lecture, and also a little bit into 14.2. It's not that business asset disposal relief is itself a very long relief to deal with, but what I also do in terms of the Finance Act 2020 lecture that you're about to see is to discuss the whole range of different reliefs that exist. Reliefs apply in different ways. They all have an eventual outcome, and that is that they will reduce the CGT liability for the tax year in which disposals eligible for these reliefs occur. But the nature of the relief is different. Now, I won't preempt that, again, start to the lecture in terms of the Finance Act 2020 lecture that you're about to see, but we'll have a discussion of the different types to give you an understanding of what these reliefs do, the nature of the different reliefs that we need to come to terms with. And the first one will be the business asset disposal relief. And you know what that does? It gives you a lower tax rate. The gain is computed in the normal way, but those gains that are eligible for business asset disposal relief get taxed at a lower CGT rate, 10%, of course, as we know. And thankfully here, so far as we're concerned, there are no changes to the rules in Finance Act 2021, so it's exactly as was. When you move to Lecture 14.2, although again we'll finish off in Lecture 14.2, the Business Asset Disposal Relief, and as I said, there are no changes there in terms of the rules that apply to it. We'll also get introduced to a further relief, Investors Relief, and deal with it, and that too, there are no changes so far as the rules are concerned. But in Lecture 14.2, which I say is using the Finance Act 2020 lecture, where there are again no changes to the rules in Finance Act 2021 by comparison to what we had in FA 2020. But we do know that there is a link, of course, from capital gains to income tax. Because if you are applying your normal CGT rates that we've seen applied through, well, we got introduced to it in Chapter 12 there, of course, in terms of the tax rates that apply, there's a link. There are differing tax rates, lower levels, lower rates, higher rates, and of course there are different tax rates for certain types of asset. But from the income tax computation, that formed the basis for taxing most gains, certainly those that we've seen in Chapters 12 and 13. So there's a class example that I use in Lecture 14.2 that uses, as we're used to from the previous lectures that you've already dealt with, uses a basic rate band limit of 37,500. Now, we know that that was true for the 2021 tax year, but of course now, using your current FA 2021 study notes, that's gone up to 37,700. So the only difference in terms of the class example used is that it's 37,500 used in the lecture. It would now be 37,700. There are two examples dealt with within that lecture, examples 2 and 3. And simply for example 2, where there are no changes in the outcome, it is the same answer that you get. We just have to assume that the disposal is in 21-22 rather than in 2021, as per the example you'll see on screen. As is the case also with example 3, where the disposal is again in 2021. It's the same answer that you'll get for a disposal in 21-22. It is only the dates that change. So in which case, over these first two lectures taken, as I said, from Finance Act 2020, this one, a general introduction to all of the reliefs that we'll see throughout this chapter, and then specifically dealing with the detail of business asset disposal relief. That then will roll over to, sorry, I laughed there. I said the term rollover. You're about to see in that introduction that one of the big reliefs that we have to look at is rollover relief. So no pun intended here. But in lecture 2, we will continue, shall I say, by then finishing off the business asset disposal relief and getting on to investors relief, where again we will see, just like business asset disposal relief, it allows for a much lower CGT rate to apply to gains that would otherwise have been taxable at a higher rate. That rate, as with business asset disposal relief, is 10%. I'll leave you, therefore, to enjoy now those first two lectures. At the beginning of lecture 14.3, I'll again come back to you now live, as it were, in terms of our current 21-22 tax year, and tell you what lectures there from the past we're using and the changes, which is basically just a terminology change that you'll have to watch out for as you watch the older lecture in conjunction with the new notes. But I'll come back to you on that at the beginning of lecture 14.3. For the moment, enjoy lectures 14.1 and 14.2. In this chapter, we turn our attention to reliefs that are available to individuals within the CGT system. And before we get locked into any detail, you can see the first of those reliefs to look at here is known as business asset disposal relief. Before we lock ourselves into the technicalities of each individual relief, I just want to do a quick overview of what these reliefs are and the different ways by which they help the taxpayer. Clearly, a relief is a good idea. If you can relieve in some way your CGT liability, and all you got to do is claim this relief, then it's a good idea to be able to recognise where these reliefs are available and know then the impact of applying that particular relief. But these reliefs come in different forms in terms of how they assist the individual taxpayer. So I'd just like you to make a note here of the following information. Firstly, the first type of relief that we're looking at, and that will include the first on our list in this chapter. I've abbreviated there to BADR. That's not as yet, as far as I know, a recognised abbreviation, but it stands for Business Asset Disposal Relief. If any of you have any prior knowledge of this subject area from FA 2019 and before, what we used to have was something called Entrepreneurs Relief. A good European, a good French word there, the entrepreneur. Well, whether it's anything to do with Brexit or not, we dropped the French word. And what we now have is this, Business Asset Disposal Relief, which is a pretty obvious statement. We're going to get relief on the disposal of business assets here. Business Asset Disposal Relief. And this relief, along with another one called Investors Relief there, these are the two within the category of reliefs that provide a lower tax rate. So they're not going to impact on the amount of gain that is taxable, but what they are going to impact on is the tax rate. And where these reliefs apply, to the extent there are limitations that apply here, to the extent that they apply, it will mean that gains that are probably going to be very, very serious amounts that would otherwise be in the 20% tax category will instead be taxed at a much more beneficially low tax rate of 10%. If it's available, you are otherwise a higher rate taxpayer. The availability of this relief halves your tax rate. That's got to be a good idea. We only pay 10% instead of paying their 20% as a higher rate taxpayer. Those are the reliefs we'll look at first. We then move our attention to look at a different type of relief. A relief that is immediate, but what it does is not exempt a gain. It doesn't reduce the tax rate at which we pay tax on the gain. What it does is to defer gains from such immediate chargeability. They are allowing a taxpayer in a qualifying situation to avoid being taxed now on that gain in this tax year and defer it to a future point in time. We may even be able to, in terms of at least one of these reliefs anyway, pass over the responsibility for the tax on any gain made to another person. Well, what are these reliefs? Firstly, rollover relief. Again, this is to do with a business asset, and one where, within an ongoing business, what we have done is to dispose of one qualifying business asset, typically a property used within the business, within the trade there. And what have we done? Well, we've disposed of our business premises. We need more business premises. We can't operate from nowhere, though you could, of course, rent a property rather than buy one. But you sell a property used in the trade and you reinvest the proceeds in another property that you then use within your trade. And as we'll discover, if you've reinvested all the proceeds, you've ploughed all the money back from the one asset that you've sold to the new asset that you've purchased, both are qualifying business assets for purposes of rollover relief, then any gain that has risen may be deferred. How that deferral process works and when it is deferred to, well, that awaits us when we look at that detail in a later lecture. But I also said there that the way the deferral could work was not just to avoid immediate chargeability, but in fact also to change the person who would be liable for any gain and therefore the tax thereon. And that is gift relief. With gift relief, you have someone making the gift, the donor, and you have the person receiving the gift, the donee. When an individual disposes of a chargeable asset, the individual being a chargeable person, I think you know where this is going, then that chargeable disposal gives rise to the need to compute either a chargeable gain, as it will be here, or in other circumstances allowable loss. If you were to gift something away, whether outright or in part, then if you gift it outright, there are no sale proceeds. If you sell it under value, then there are some sale proceeds, but not the full value of the property. In these circumstances, right from our very first lecture, when we looked at that term, chargeable disposal, we recognised that where a gift is involved, we will use open market value in absence of any disposal consideration, or if those actual proceeds we sold deliberately at undervalue, there was a donative intent. Instead, we use open market value. So the individual has given something away, and yet we still use market value to compute gain. This is going to be very confusing for the taxpayer when we tell them, oh yes, you've asked whether there is any tax, whether there are any tax issues pertaining to you giving that asset away. And that's where this important narrative statement comes in. One of the very first things that we've learned, and we've reminded ourselves time after time in these lectures, that wherever we have a chargeable disposal, that includes a gift, of a chargeable asset, it is not exempt, it is a chargeable asset, and you are UK resident, you are a chargeable person, then a gain must be computed. So imagine how surprised the taxpayer will be, your client will be, when they discover that although they've given something away to their son, daughter, nephew, niece, grandchild, whatever they've given something away, they got no cash consideration coming in, or if they have, it's a very small amount by comparison to the market value, that we are actually going to compute a gain based on market value. Though they didn't receive it, we're going to compute a gain based on market value. Now, I hear you using again the F word here. That's not fair, I hear you say. Yeah, that one. So in which case, not about fairness here, that's the nature of the taxation system, though they try, of course they do. But what we must realise is, if we have a chargeable disposal, chargeable asset by a chargeable person, then a gain must be computed based on market value. And that would leave, therefore, the donor with a liability to CGT, depending on the amount of the gain, of course, there. But what gift relief enables that donor to do, with the agreement of the donee, is to transfer the responsibility of that gain to the donee. So the donor is able to give the asset away. Yes, a gain is computed, but the donor does not have to pay any capital gains tax in relation to that gain. Instead, the responsibility for that gain and what would be a future tax charge, not an immediate tax charge, that passes to the donee. Again, that's a joint claim to be made by donor and donee. The donor can't just do this unilaterally. If the donor wants it, it's fairly easy to say to the donee, look, I'm going to give you this asset worth £1 million here, and would you like that? Yeah. In which case, therefore, I'm not going to be charged to tax on that gain that would arise in relation to that £1 million asset. You can have the asset, but you take responsibility for that gain arising now in the future. When will that future point be? When you dispose of that particular asset. And if you don't like it, I won't give it to you. But it is a joint claim that needs to be made here. So both of those reliefs, rollover and gift, are deferral reliefs. And the best type of relief we could ever have is this one. A relief that exempts either some, or even better, all of a gain made. And that is where this one, private residence relief, comes into play. Now, we've mentioned this before. We've said a lot about residential property and the downside on the disposal of residential property, in as much as there are problems here for the taxpayer, given the tax rates that they will have to pay. We've got a higher tax rate applicable to residential property gains rather than any other assets. And as we've seen, not only do you pay more tax, you pay it a damn sight sooner than you would pay the tax on any other assets, because we've got those payments on account on the disposal of residential property that also have to be paid by such a taxpayer. Now, millions of taxpayers, probably millions each year, dispose of their homes. They sell it, they buy another one. Or maybe they buy another, but maybe they trade down, whatever. But it doesn't matter, because if that is their private main residence and it qualifies in full for private residence relief, then that gain will be exempt. Now, private residence, look, it doesn't say private residence exemption, it says private residence relief. So most disposals of private residences where the owner has lived in that property, then those gains will be fully 100% private residence relief will be available, which is as good as saying it is exempt. But if this issue gets tested in an exam question that you've got to deal with, what you'll discover is that not all of the period of ownership of that private residence will qualify for relief. There will be reasons why certain periods, usually, of course, periods of absence from the property, will not qualify for private residence relief. And it's that will be tested. But to the extent that it is available, this is an exemption. That amount of the gain will not be charged at all. Now, that's as good as it gets, so far as any taxpayer is concerned. We have an exemption. So you're not going to pay any tax, and neither is anybody else in relation to your gain being deferred. No, it is exempted. For the donor, then you've got these categories. We've got the gift relief being available in relation to gains made, where you can defer the gains chargeability from this tax year on you to a future tax year on the donee. Or in the case of rollover relief, then you are deferring the gain that is chargeable not to somebody else but to a later point in time. I dispose of a business property used in my trade. That gain, assuming we satisfy the qualifying conditions, therefore is able to be deferred through the application and claim for rollover relief. Why is that available? Because I've sold one business property and I've reinvested the proceeds in another business property used in my trade. What then happens? In the future, we dispose of that property. But if all you do is keep on reinvest all the proceeds, then you can keep on deferring. But if at some point in time, and that point in time is likely to come in an exam question, where you fail to reinvest all of those proceeds, then you, that one taxpayer who owned the first business asset, the second, the third, and however many other business assets in use in their trade, if they take out cash on the deal, they fail to reinvest all the proceeds, then it is they, but in the future, that get charged in relation to an amount of that gain. Deferral reliefs. But where we'll start is we don't exempt a gain, we don't reduce a gain, we compute a gain in the normal way, but then the gain that arises either in part or in full qualifies for this lower 10% tax rate. The first of these, business asset disposal relief. Business asset disposal relief, well, what type of business owners do we have? An unincorporated trader. An unincorporated trader, he or she personally owns the assets of the business, the property, the plant and machinery, whatever it might be. You individually own those assets. And at some point in time, you may dispose not just of a business asset that you use within the trade, but you dispose of the business, or at least a qualifying part of the business. So you might have an unincorporated trade that operates two arms to it, two divisions of it. Pardon me. And rather than selling off the entire business, you've decided, well, I've grown this part of the business, this division, as far as I can. I will sell that off, but I'll keep the other part of the business going. So either the entire business or an identifiable, a separate part of the business can be sold off. Those gains may then qualify for business asset disposal relief and allow, up to a certain limit anyway, of gains, that 10% tax rate to apply. But not all businesses are run as unincorporated trades. Most businesses probably are run as companies. And what the owner owns, as you know, are shares in that, what is going to be here, an unquoted and unlisted trading company there. So when I dispose of my business, it's not the assets of the company that I sell. The company owns the business property, the plant and machinery, the stock, etc., etc. The company owns that. What do I, the individual, own? I own shares in that company. I dispose of those shares in what will be a qualifying and usually unquoted trading company here. In those situations, then the business asset disposal relief would be available. I don't get business asset disposal relief if, as an unincorporated trader, I sell off a business property. I carry on trading, I move to another property, or I rent a property. Now, if I do that, I simply sell off an asset used within the trade, and the trade keeps going, then there's no business asset disposal relief. This is only where you sell the entire business or an identifiable and separate part of the business that can be sold as a separate entity there. In those circumstances, I can go, if, as we've already said a moment ago, if I were to sell a business asset like a property and sell it and buy another one, then the gain on the business property, well, that will qualify for relief. But that, of course, was that one there, rollover relief. Sell a property, buy a property, reinvest all the proceeds, gain can be deferred. But in this one, the first category that we're looking at, and this one in particular, business asset disposal relief, we're either dealing with an unincorporated trader selling the entire business or a part of that business that can be run as a separate trade there. It is not selling an asset used within the trade. Or we're dealing with an individual who disposes of qualifying shares in a qualifying company. And again, we'll see the detail of that in just a short while. Now, in those situations, either you own the business, you run the business, or if it's a shareholder, to qualify for business asset disposal relief, you have to be an employee of the company. You have to be working within the company for that business asset disposal relief to be available. Once upon a time, if you were just an investor and you bought shares in a qualifying, which again will be an unquoted trading company, then there were no reliefs available to you. But we're going to discover in our studies here that back in 2016, they introduced the ability for someone who invests in, so subscribes for newly issued shares in a company. You're putting new, fresh capital into a company. Someone who's willing to do that, this is a good thing for the economy, for someone to take their money out of the bank and put it into, in the form of equity capital, into a company that will then invest that money within the business and therefore grow that business. And that's got to be good for the economy. It's got to be good in terms of the public purse there, in terms of money coming into the government. This should be encouraged. And what they did, therefore, was back in 2016 to bring in investors' relief. What we'll discover there is that a principal condition is you're not an employee in the company. If you're an employee in the company and you dispose of shares, then you're looking down the road and the route of business asset disposal relief. If you're not an employee, then it's this one, investors' relief. But if you have gains that qualify for either of these two reliefs, the common effect is you get a 10% CGT rate, a whole lot better than a 20% CGT rate there. So what I want you to do just for a moment now is just to go back over the things that I've said in relation to these reliefs, because the remainder of the chapters that you are to go through, the remainder of the lectures to go through on this chapter, we'll be bringing in these individual reliefs. But I need you to see the bigger picture before we start to look at detail. What's the basic premise of what this relief does? What type of relief is it? Is it one, as in with our first two, that reduces the tax rate? We get this 10% instead of what would presumably have been a 20% CGT rate. Does it defer the gain from immediate chargeability to a future point in time, and maybe even changes the responsibility for the tax on such a gain away from the donor to the donee, i.e. gift relief applies? Or is it, as will happen on hundreds of thousands, if not millions of occasions in the UK in the tax year, when individuals sell their home, their property there, they get private residence relief. And what does that do? To the extent that the relief is available, it exempts that amount, usually in real life 100% of the gain made in relation to the property. So have a little ponder on that, go back over the things that I've said. And what we'll then do is get stuck into the first of these reliefs. And, well, they're all important, but a really important one, business asset disposal relief. I don't know whether I mentioned this earlier, if you have done the subject before, before FA20, i.e. FA 2019 or before, then what we now refer to as business asset disposal relief is otherwise referred to as entrepreneurs relief. What you have in some of the lectures, as I've already mentioned in introductions to them, is that we may have used in an FA 2019 lecture the term entrepreneurs relief. We now call it business asset disposal relief. The vast majority of the rules are the same. There's one big difference, and that is how much gain is actually eligible to be taxed at 10%. Under the old entrepreneurs relief rules, you could go up to £10 million in your lifetime. The new rules, you can go up to just £1 million in your lifetime. Now, wouldn't we all love to make £1 million worth of gains? I'm sure we'd be very happy with that. But that has taken a rapid reduction there from 1 year to the next. It's now just 1 million. Investors relief, that's the same name as it was before, as with all the other reliefs, if you've got a past history, as I say, in taxation from previous studies. And investors relief, that stayed at £10 million in terms of the amounts available. Otherwise, basically the rules that we see have stayed the same. Okay, have a little pause before we get stuck into business asset disposal relief. Okay, so building on what we've already said in our introduction about these reliefs, but now specifically on business asset disposal relief. The disposal that we'll be dealing with is either the individual disposing of their unincorporated trade, or in the case of a partner in a partnership, their share of that trade. But it must be, as it says here, individuals disposing of a business or part of a business there. So that would include the sole trader, the partner, but also in terms of the business being sold. It cannot be just an asset used within the trade. It must be an identifiable separate part of the business, something that can operate in its own right as a business. Just selling off an asset used in the business is not sufficient. What we've also said is that not all businesses are run as unincorporated trades. Often, of course, it is the case that we own shares in a company, where therefore we have a qualifying disposal of shares, then that disposal will again be eligible if all the conditions have been satisfied. We only have to know a few of those, by the way. Then business asset disposal relief will be available. What type of relief was it? It is, of course, a tax rate relief. It means that qualifying gains get taxed at just 10% there, irrespective of what the individual's taxable income may be in relation to their income tax computation. So as we've just said, the relief here is available on a disposal of the whole or part of a business run as an unincorporated business, so you're sole trader or you're a partner in a partnership. The relief, as we've said, is not available if the trader simply disposes of an asset used in the trade, which of course is usually, the business sells the property they're used in the trade and maybe does or maybe doesn't buy another one. That the trade continues. You're selling an asset used in the trade, not a trade, the trade, in which case, no, you don't get this relief. However, I've just said that the business carries on. What may happen, of course, is that we hope that when we get to the end of the business life cycle, as we often call it here, that the disposal of the business, this unincorporated trade, is as a going concern. So, as well as a very valuable business asset, the business property, potentially an even more valuable business asset would be the goodwill of that trading business. But what may happen, unfortunately, we may have had once upon a time a profitable business, but of course gradually those profits have dwindled and maybe now disappeared. And this business has basically run its business life cycle. And although there are valuable assets like a business property that people would be willing to buy and upon which you would make a gain, you cannot, at the point at which the trade ceases, dispose of all of those assets. You may not be able to dispose of any of them just yet. You can't carry on trading, you're hemorrhaging cash. The sensible thing to do is stop that business. and then look around to see, will somebody now like to buy these assets? Well, in that situation, as it says here, see the next point on sale of assets post cessation of trading, that is individual business assets of the individuals or partnerships trading business that has now ceased. Note the disposal of assets must take place within 3 years of the cessation of trading. So I just said a moment ago that the ongoing business, unincorporated trade, we sell the property used in the business, but the business carries on. We move to rented premises or we replace with another property that we purchase. Then there is no business asset disposal relief. If, however, the business has ceased trading and now we're looking around, and hopefully in the 3 years, hopefully the 3 months, but within 3 years of the cessation of the trading of the business, we are able to sell, let's pick the most likely business asset, a property, and we make a capital gain on that. HMRC are not spiteful here. They say, yeah, in that circumstance, yes, you did use that in the business. It was a qualifying business up until the point you ceased trading there. We're not going to take away your business asset disposal relief. You again, to the limits that we'll look at in a moment, you may recall 1 million, you can have that relief. You can have your 10% CGT rate. Just one point here. It says here the assets must have been owned for 2 years prior to the date of disposal. Something like that. It's not the assets, it's the business. We are on this subject about the business as compared to assets used within that business. The business must have been owned for 2 years prior to the date of disposal. So when we sell our business as a going concern, the fact that a year ago we sold a business property that we had used in the trade and we bought a new one, so that asset has only been owned for 1 year, it doesn't make any difference there. Again, it is the business that must have been run for at least 2 years. So owners of unincorporated trades, whether outright as a sole trader or partly as a partner in a partnership, on the disposal of the business, yes, a 10% business asset disposal relief tax rate will be available to you. Again, though, the business has to have been owned by the individual for at least 2 years. What about if it's a company and what we're doing is to sell shares? The disposal of shares in a trading company where the individual has, right, the conditions now for the relief to be available. First one, must have at least a 5% shareholding in the company and is also an employee. Now that can either be part-time or full-time there. So as long as you are an employee, it doesn't have to be full-time. An employee of the company for the 24 months prior to disposal. So again, a 2-year qualifying period. Here in terms of the ownership of the shares and being an employee. In that situation, then yes, yet again, this relief is available to you. There's no restriction of the relief if the company owns investments. The company is either a trading company or is not. There is no apportionment of the gain eligible for relief. When we look at certain reliefs, it's all about qualifying business assets. On certain reliefs, if you have a business that has a mix of both assets used in the trade and basically investment assets, then proportionately we may limit the gain to that proportion that pertains to the assets used within the trade. The business, the trading assets, not the investments. Here, and you won't have to worry about what's the cut-off between what is a trading business and what is not. But here, if you were told, for example, that there's 5% or 10% of the assets that are investments, it does not affect the availability of business asset disposal relief. Either you get it, and in those circumstances you would, or this is an investment company and therefore you don't get this relief. There's always a claim that has to be made and there's a time limit within which it should be made. There, you've got that rule. Isn't something for you to worry about learning now, but closer to the date as ever of the exam, then you need to pick up on some of the admin issues there, because some of these admin issues are going to be tested in your exam. but the relief must be claimed within 12 months of the 31st of January following the end of the tax year. Now you will recall that you normally have to pay your CGT, and certainly on these business assets you have to pay your CGT by the 31st of January following the end of the tax year in which the disposal took place. Well, what we're now saying here is in relation to business asset disposal relief, you then must be claimed within 12 months of the 31st of January following the end of the tax year. So you've got another year after when you had to pay your tax and get your tax returns in. You've got another year to make your mind up. It's not usually an issue. You will know well before you have to pay any tax that the relief is available, and you would routinely make it. We wouldn't choose to be taxed at 20% if you can instead choose to be taxed at 10%. Of course you would make the claim. So for 2021, following 31st of January is January 22, 12 months on from that, 31st of January 2023. Right, example 1 here. To calculate Daisy's capital gains tax in 2021. What have we got? On the 30th of September 20, so yes, in the 2021 tax year, Daisy sold a business that she ran as an unincorporated trade since February 13. What does that tell you? Clearly, here Daisy has the 2-year qualifying period of ownership. The sale resulted in the following gains and losses on the disposal of the business assets. So it's a qualifying business we've owned for 2 years. We've got a disposal of the business, not just an asset that we happen to use within it. And the typical business assets that you see for the unincorporated trade where gains will arise are goodwill and business property. Here it's a factory. But what we've also done is to stick a warehouse in there. In terms of the gain qualifying for business asset disposal relief, you must establish the net gains. For this purpose, irrespective of any other gains made by the taxpayer in the tax year, the gain that will qualify for this relief is this net gain in here. So we got 250 plus 320, so what's that? That's 570 less 90, so that's going to be what, 480,000, is it? Better use your calculator and check that. But it is that net gain. We don't separate out the loss made on one of those business assets. We get a total figure of net gain that is eligible for the business asset disposal relief. You do not have, and we'll talk more of this later, the ability to say, well, I'd like actually to put that loss against other gains. Other gains that would be chargeable at a higher tax rate. You can't do that. The gain eligible for the business asset disposal relief on the disposal of an unincorporated business is the net gain. We must net out here the loss against those gains. But we're not finished yet. In December 2020, Daisy also sold a 20% shareholding in Bed Limited, an unquoted company. 20%. We've got at least 5%. Daisy had been an employee of Bed Limited, from the date she acquired the shares in July 15. So we've been an employee, we've owned the shares, yet again, for more than 2 years. We therefore qualify. The gain on those shares was £370,000. Now, we've got to put that together to work out the CGT liability. And that will be a simple enough exercise. We will take those gains and do they qualify? We'll see why they do qualify in a moment, and then we'll tax those gains at the CGT rate of 10% applicable to this relief. But to understand that those gains will be eligible, we have made mention of a few times now that there's a cap on the amount of gain eligible for the relief. Back in this note here in our introduction, the relief covers the first £1 million of qualifying gains that an individual makes during their lifetime. Now, if therefore the individual had made any other gains that qualified for this relief, or what existed before it, which was entrepreneur's relief, then that must be taken into account in determining, do we have any of that lifetime limit left? You're not going to have to make that up. If there have been earlier gains that have qualified, that have reduced what would otherwise now be a 1 million limit to something lower, you will be told in the question about those earlier gains, and you just remove that from the 1 million, and the balance that remains is then the gain eligible for this relief. The qualifying gain, as we know, charged a CGT rate of 10%, regardless of a person's taxable income, with any gains in excess of the limit being charged at 20%. Okay. What I'd like you therefore to do now, you see the requirement, calculate the capital gains tax in 2021. What we'll find is that the gains here that qualify for business asset disposal relief do not total more than £1 million. No information about any of the lifetime limit of £1 million having previously been used, and therefore all of those gains will be eligible for business asset disposal relief. What you'd probably also be told is about the level of taxable income of the taxpayer for the tax year. But that, as there are no other gains that have been made, is irrelevant here, because all of these gains will be taxed at 10%. The situation which is more interesting, and we'll deal with in our next session together, is where we have a mix of gains, some that qualify for the relief, and then other gains on other assets. And we have available losses, and of course we have available, as you would hear, your AEA, and you've got to bring it all together to work out that CGT liability. But I'd like you to have a quick go at that. Now, you know what, if the arithmetic was correct there, you know what the gains are, you know that you have an AEA each tax year, and then that all of these gains total less than £1 million, so the 10% business asset disposal relief rate will be available to you. Pause for the moment, work that out, and when you join me back again, we'll have a look at that answer to confirm your correctness of answer. I look forward to it. Okay, well, hopefully no problems there. We put the three individual assets together, sold and when you disposed of, when Daisy disposed of, her unincorporated trade here together, to get net gains of £480. The sale of the shares gave rise to a gain of £370,000. Net chargeable gains £850, less AEA, bringing you down to a taxable gain of £837,700. That £837,700 there, oops, that should be 837,700, not 838,000, my apologies for that. But that at 10%, yes, that's correct. It's £83,770 there. It would mean that we had gains qualifying for relief, that's before the AEA, of 850. So 1 million is the lifetime limit. We've used up 850 of that lifetime limit. We've got another 150,000 to utilise over the rest of her lifetime. When would the tax be due? 2021 disposals. Therefore, the tax will be due, like all other assets, apart from residential property, of course, the 31st of January following the end of the tax year, and that is 31st of January 22. Okay, go back through that, through what we've done in this lecture, as I'm sure you always do anyway, and then the next lecture we will carry on with and deal with the remainder of the knowledge that we need to have on business asset disposal relief, and if there's time we'll get stuck into investors relief as well. Thereafter we move to the different types of relief that we discussed at the beginning of this